Thursday, August 22nd, market analysis. Stan Ehrlich, good morning. About 9:55 California time, about the middle of the day, we have some major sell signals in progress in the stock market indexes. We got overbought. Wait a minute. You guys know I usually start out with the stock market indexes, go to futures and other topics as well. Probably now influenced to begin to talk about the break in greater detail into the October lows coming up in October. I expect we'll find out in a month and a half. So today we have an outside down day, bearish engulfing sell signal in the E-mini, which is also overbought today on my custom relative strength index. As a result, automatically turning the daily candlestick red for a sell signal. Now we need to close lower than yesterday's close. If we do not, the sell signal disappears and it's not a legitimate signal, which almost always, not always, but almost always, this continues to develop into greater, bigger signal today. Therefore, I'm expecting new lows. But we have just gotten a sell signal, not quite at the top back on July 11th. We got a buy signal almost at the bottom of the market on August 8th, and we are still in that trade, but probably about to get stopped out today. Finally, very good profitable trade. And I'm looking for this bearish engulfing to be the beginning of a move down into October. Period. Plus, some of these indexes are going to look like a double top formation, if I'm right. And today being the high day on the second high of the double top. Let's look at some detail here. The mini, what do we got? The 5-minute chart. This bar shows you the beginning of the bearish engulfing hour sell signal, dropped off some more, got short. We did have a little bit of a loss for a short period of time, and look how close we're coming to new lows now. So I'm expecting, as I just mentioned, new lows before the end of the day, and maybe quite a bit. This could start to quote unquote like fall apart a little bit. The more the better for the sell signal purposes. Hopefully people can do something about it. The spider also having an outside down day, bearish engulfing. It's been overbought for 2 days already, and today, the third day, bearish engulfing, ER sell signal down in the day, a little bit less than a point at the moment, which is a very small amount. A day like today could easily be 5, 6, 7, 10 points lower. That would wipe out the lows of the last few days. And I'm certainly not ruling it out. We're only halfway through the day. If all of that happens, this is also going to look like a double top. You should expect that. It's the father of the E-mini. The spider 5-minute chart, higher high on the opening, and that's classic. Started to fall apart. This is the best bounce we've had for a little bit, and it's going to look like it's going to make new lows real quick. The QQQ has a bearish engulfing ER sell signal today. It almost got up to resistance. It did get overbought today, the first time in, well, since about the 12th or something like that of last month. Last month. The last time it got up here. What am I looking at? So yeah, 11th of July. It didn't finish closing gaps. It's not really going to look like a double top. A little bit too low for my liking to be considered a double top, but everything else is there. Great, excellent, fantastic if this sell signal does pan out correctly. But if you don't get in relatively early, you're increasing your risk factor probably and decreasing your profit potential. Next. Our sell signal did occur a little bit lower than where we are right now, so I don't see anything wrong with going short in this ballpark price level. That's not an official recommendation. I used to have broker's licenses. They were gone 10 years ago. So when I had a stockbroker for a couple of years and a commodity broker, something like 35, let alone, well, you know what else. So I like what I see a lot today. Finally, I've been talking about this for well over a week. Finally, we got more of these overbought, most of them. And here's another bearish engulfing the NASDAQ futures contract, NQ, September futures. Bearish engulfing, overbought conditions just barely today, but it did the job. You know, the RSI got up to, I think, 75.09. Yeah, that's above 75. It did the trick, and kaboom. Now we're almost out of our previous long position, which will be a very, very nice profit. I'm liking what I'm seeing. I could, but I'm not going to, because I've got my disciplines, raise this stop because of my psychological learned expectations. The system does what it does, and it's been working fine. So I'm not going to change the kick. I could be wrong. Next, NASDAQ, 5-minute, got short right around here. Okay. Or no, that's where we got stopped out of our previous long position. Looks like it's about to make a new low again. What can I say? Here we go. This, I think, is the beginning day of a move that could be down for into the middle of October, give or take, sometime in October. Now, I'll get to the details as to how much further down, what price levels I've got for downside objectives in October, probably tomorrow, but I'm waiting, doing too much time here on the indexes to start with. The YM does have a bearish engulfing, but it did not get overbought, so therefore you're not getting what we did get on the top of the market on July 18th. Too bad. But it's come extremely close. Plus the fact that we did get up to a new high over that previous bear trend line, and it's not holding at all. All of the closes in the last few days, touching, getting a little bit above the trend line, didn't stay there on a closing basis. And today it's just giving up the ghost. So how does it handle the support? I think it's going to break through it. It's going to go all the way back down in the YM, down to these lows and make new lows lower than the last few months into October, in my opinion. YM 5-minute chart doesn't have red because it didn't get overbought on the daily data RSI. So too bad. Next, higher high on the Russell, not quite a bearish engulfing yet, but if I'm right about this stuff, it's going to do it by the end of the day. And it's in a major area of resistance. The Russell's not quite the same, doesn't do the same things necessarily as the other indexes, meaning SPY, Dow, and NASDAQ. So, yeah, it could develop into a signal. Next, Russell 5-minute. That's not as weak, as fast, as quick. It didn't get below yesterday's low yet. And that probably will drop below the lows of a couple of earlier days also. And remember, I think this is possible today. Next, now we're going to bonds, interest rate futures. And all of a sudden, I'm looking a little bit more correct, not quite so stupid. Now, this rally in bonds did not make a higher high. It got up to a little bit of a resistance line that I had there for quite a long time now. It's how it handles the support levels on the way down, and I think it's on the way down. I think yesterday's high was it. We didn't get any reversals. There was nothing particularly special about it. It's just that I didn't want any new higher highs, and we came close. And the sooner it started to show some bearish activity, the better. And here it is. We're down 49 ticks at the moment. I expect some sort of a zigzagging back and forth move down to as low as 116 somewhere in October. And maybe not that low, maybe down to 120 or a little under. So nothing terrible, but the big bull market move, which I fully expect sooner or later, could be delayed a few months. And actually, this dip down, I'm expecting back to the old neckline, and that's not really old, it's the current neckline. This yellow dash line would be not out of the expectations of what Head and Shoulders normally do. You got your major upside breakout. You got a correction back to the neckline. That might have been it a week or two ago. I've said that a few times now. So there's a chance this could just keep going straight up, but that doesn't seem to match with the bearish expectations in the stock market indexes. So it's starting to come true, I think, the zigzag back and down to October. And what about notes? Notes are the same exact thing, except notes topped out just at last week's high. Not even that close to the top, which was made on July 5th. So they're a little bit closer, making a new low for a couple of weeks. Bonds, well, yeah, and notes, okay. So if they start closing below the low on August 8th, I'm going to start looking pretty good. Next, crude oil, bouncing a little bit today. Nothing important about it. Nothing I can gain from relative strength, except it is at the bottom of the pennant formation, which I've been talking about quite a bit. So rock in a hard spot. We're close to which one? The rock, I guess. But anyway, maybe it's going to rally up to the resistance level again. I couldn't rule out a little bit more of a dip. But most important thing is how it handles this bull trend line. Next, natural gas. I was thinking that this is going to be developing a possible head and shoulder bottom, but no, this seems to be too low and a little bit too far away timing wise. If I drag this marker to this point for today to be the low, I suppose you could make a case for that being an all right low, but my problem is that I don't see it popping back. We got no bounce. We're below previous lows for a couple of weeks and it's staying there. It looks like it's going to be a new low close for a couple of weeks and on the way down more, which the more days it goes sideways to lower, the worse the pattern and it just plain disappear at a point. Judgment call. The quicker it go down, the faster. That also kills the formation, head and shoulder. Although granted, they sometimes develop into double bottoms. But still, the head and shoulder is in major jeopardy today. Next, heating oil. Major support is holding for the third day, and we just barely nicked oversold. So now it's a yellow line candle, and that implies if it can get above yesterday's high by the close today, we're going to have a bullish engulfing green signal. Hasn't happened yet. Looks like it's trying to bottom out. Where's it going to go? Well, probably up to about 2.4 and a half. Something like that seems very reasonable. We'll see what happens in the next couple of days, but I think it's turning up. Gold did get overbought a couple of days ago, was above a previous bullish resistance line, which I'm now thinking, should I raise it up like that to go above the highest high? Well, you could always have two different lines. I'm going to leave it the way it used to be because when we broke the line on a closing basis, we were also overbought, making me a little suspect that the breakout was going to be legit. And I think I said those words exactly. Well, today it's a new low for the previous 3 days, and it looks like it's going to stay down here. So the overbought condition and the line basically combined caused this break. I think it's going to come down to here at least 2,400. If we start to challenge 2,350 and break below that on a closing basis, especially with a big down day, then the double top, or rather a quadruple, so to speak, and it doesn't really exist. But a major resistance area stopped it. And we'll get a downside objective of 2180. Ultimate at the moment. Next, silver, being helped down by the gold going down or vice versa, is a new low for a couple of days. And I think this is it. The high Monday, I think, was the last rally back toward the neckline, which didn't even get to it, which is fine and dandy with me. Now I'm looking for a low into the support area again, where we got a buy signal at the very bottom of this last move. Great signal. Unfortunately, nothing in the tops. And so I think that's over. And down we're going to go to make new lows. The minimum downside objective is 24. Next, platinum. Same story. Although it seems to be a little closer, to making new lows. So it looks like it could make a new low sooner, quicker, better than silver. And the downside objective on the major formation here is 808, or what did I say, 810. I think 810. We got a signal on the top of the market to the exact day, the head of the head and shoulder top. And when that signal happened on May 20th, there's no way in hell you're going to know that this is going to develop into a head and shoulder. All you got is a overbought condition with a sell signal and a bull trend. But as the next couple of months evolve, look what we did. So I'm looking for, and it could be lower than 110, 810, sorry. So that's the minimum downside objective. Next chart is a high-grade copper. We had 2 buy signals. Today we made a new high for the move, but we currently developed a bearish engulfing. Now it's not an ER sell signal. We weren't overbought, so I'm not getting red. But we also got hit on our trailing STS smart trailing stop, and we took a small profit on an ER1 overnight trade based on the buy signal August 15th. We also had one a little cheaper a couple of days early, a few days earlier on August 12th, almost the bottom of the move. I'm basically bearish here. So I think we're about to have a move down, which has now started as of today, to 3.92 or lower. And lower, I do expect it to be broken. And we are going to go down maybe to about 3.7. Soybeans, oil, meal, corn, wheat, cattle, hogs, and then I'm finished. Almost a new low in beans. Got oversold, had a very feeble rally. We've got to bottom out here again. If this is going to develop any kind of a bottom, I'm afraid I don't trust that to happen. I think we're about to smash into new low ground again and keep on coming down. This is such a dynamic, heavy, long-term bear market. It's ridiculous. The rallies have been rather feeble. The breaks have been substantial, and major historical downside breakouts have happened a long time ago. Next chart. Soybean oil, essentially doing the same thing, making new lows for quite a long time period since June of 23, over a year ago. Rallies haven't gone anywhere but resistance. We now have an outside down day at the moment. We're not overbought, so we're not going to get any kind of a bearish red sell signal out of it. But you know how I feel about bullish and bearish engulfing. Next, new low for a few days in soybean meal. It's about to do what beans have done, corn's done, wheat's done, oil's doing, and make new lows for quite a long period of time under 284. I give it a week or two. 304 and a half last. If it starts to close above this high on Tuesday, that's a different story. Then I have to start to change my mind. That's my fail safe. Otherwise, I think it's about to make a new low for months and then for a lot longer. Next chart. Corn has done essentially all of those things. Major historical support is given way. No rally has been of any particular significance. And we're about to make another new low. Buy signals haven't worked worked very well at all. Wheat. I was trying to make a case for a head and shoulder bottom. Now totally wiped out. Not only do we have a new low for the move completely below the head of the old formation, therefore marker, delete, marker, delete, marker, delete, and neckline, not a neckline. You could consider it an intermediate bear trend line, but I'm deleting it. So what we got? Oversold again, new lows for the trend, bounce maybe up to 580 again, and stop and turn down, new lows again. I probably new lows for a few days to follow right now to get more oversold. I can't tell that. It's just terribly bearish. Next. Cattle oversold a couple of days. Today's actually kind of higher. The low is a little higher than yesterday, and today's higher is higher than yesterday, and we're currently holding above yesterday's high. We could have had a minor low. My little yellow line here is a minor support level. It doesn't show a lot of effect on the market over time, but some. That's why I've got a little line there. Probably should make it dotted and a little bit less opaque. Solid. Anyway, minor bounce up to probably 180, 181, if it can do that. First resistance is going to be around 76, 77. And we are already at 76.20, so that seems to be easy to accomplish. I do have to point out there's a previous bull trend line of significance. You got a low way back, a starting point, December 8th last year. Across a low, or very close to it, on April 12th. The exact low on May 5th was challenged a few days ago bounced today and got smashed on Tuesday, closing way below it. Wednesday, yesterday, followed through, but got a little oversold. So I think that really 177 and a half, or a little higher day by day, is going to stop this. And then we're going to see new lows or just plain new lows real damn soon. Next, major bearish engulfing in a resistance area. Miss Piggy is going to be going south. I'm wrong. I'm wrong. Totally wrong. I didn't realize the current quote was way up here. Bullish engulfing, not bearish. Into resistance, not quite overbought yet. So 71, we got to touch 75 or higher. We could test the top of the resistance area up to 80.7, especially if he gets there very fast and be at 75 on my RSI. That would cause me to scream volume order, maybe a top. Well, I want to see it start to happen. E-mini, very close to the low. It did make new lows since the beginning of my recording. QQQs, not quite yet. NASDAQ, almost new lows since the recording began. Dow, yes, it did. Russell almost did. You have a great trading day. Profitable trading to you.